And today we're going to talk about Tesla. This is the recap of Tesla's Investor Day. And I got to tell you, there's nothing more frustrating than being a Tesla investor and then reading the news flow, which couldn't possibly be more different than anything remotely. I mean, like the headlines were just so ridiculous, but I am going to go through it. The major thing that the folks that were really kind of in a weird way on this company that they talked about was this whole concept that a prototype of the final car wasn't shown. And they swear that a release was sent to the press. But like, what's interesting is usually I have a lot of criticism for CNBC, and they didn't actually bother to even go here because they kind of knew better. What I think they said they were going to show very clearly was the actual manufacturing adjustments that were going to be made for the Monterey plant, not necessarily the car itself. And the reason I say that is because they actually kind of discussed that on the earnings call a month ago. So it would have been really strange. What I was looking for, and that they gave in spades, but all the haters today in the press decided not to talk about, was how precisely they were going to get economy of scale. In other words, improve their operating margins, and how they would obtain further scale from the 1.3 to the 1.8 to the 20 million that he sometimes talks about, how that was going to happen. That they covered like crazy. And that's despite the fact that I'm looking at articles from a number of media folks that clearly were not there. And some of them were not there, and you know it because they were physically in a studio seconds after the investor day ended in Austin. So I know that they're full of it. All right, let's go through why I think they're super full of it. Okay, one of the major things that was reported massively incorrectly was the idea that the whole master plan 3 was just that first, call it 40 minutes that or 30 minutes that Elon was speaking with the other on stage. Okay. And that is just completely false. The first 40 minutes of it was really to talk about the shift to EV and what that implied across the road. And this came up. And so a lot of folks took it a little bit too crazy in thinking that what he was trying to say was very environmental related, but that's not what he was trying to say. What he was trying to say was that EVs have been inevitable. And this has a lot to do with what we've been talking about, which is even if the other cars are actually better, it won't matter because we're having an energy issue in huge parts of the world that they just don't produce energy. So the option is America keeps selling all of its energy over to Europe, specifically nat gas, LNG, and to a lesser extent also oil, to the extent that they even have refining capacity, which they lost as a function of the conflict over there. Or they start figuring out better ways to distribute what they do have in the way of energy. That was the point. I have no idea why anyone missed that point because they were so crazy clear on it. And so that was why they were talking about like 100% sustainable. We can make do with what we have currently if we're going to go at a very moderate production. I don't actually think it was necessarily, yes, it was very, they're environmentalists over there. Let's not get it wrong. Okay. But may also invest in oil. But I don't actually think what they said was incompatible because I also believe that we're going to use more energy, not less in the future. So it actually isn't a bad call to try to get what we do use and the consumption therein. So that totally wrong. If you listen to anyone that didn't understand that, you really need to realize they didn't understand at all what was going on with Investor Day. Second thing that I think people totally messed up in the way that they reported it was the resource constraint and why he was saying there was enough nickel. He was really trying to highlight, and this is something we've talked about, he was really trying to highlight the idea that it's not that there's no raw material, it's that you actually have to like make it. You can't just be like, oh yeah, we have a lot of lithium. You got to actually take it out and like make it something that can be shipped to a manufacturer to do stuff it with. And so he spent a lot of time just talking about the fact that there's plenty of lithium even in the United States to power the entire world. But the issue is the bottleneck of actually creating it in a way that it can be stuck into a battery, et cetera, et cetera. Okay, that's something we've been talking about a lot. And again, this is a huge bottleneck for them. There's a bunch of stuff that they're doing in Corpus Christi to try to speed up the innovation so that it actually helps the entire industry along with other industries. It's not even just for them, but because it's such a big bottleneck, that's kind of the issue. But that's what this slide was all about. Again, completely misreported by a number of different so-called journalists. Okay. I also want to just clarify this too, because I think people get this wrong all the time. It's really important for context. This is EV production from Statistica. It's just the final numbers that were produced in 2022. But I want you to really see that GM, which I put a ton of asterisks around, that number is quoted only because they have a minority stake, less than 50%. In some cases, I think it's like over 40, of SAIC and Wuling. These are two Chinese companies, okay? So the car production in theory number that you sometimes get from GM on EV, that's actually not GM, okay? That's actually the two Chinese companies, because you can see SAIC is actually listed again later down here. Wuling's number doesn't end up on this particular list per se, but this is from EV, Inside EVs. Okay, that's the name of the periodical out of. They did about 16,000 on the quarter, which is an all-time high for GM, which means that even if I'm being very generous, they're only producing about 60,000 EVs. Okay, like Volkswagen legit produces EVs. Okay, but GM Ford, that's like really sweet that people want to say that they're a major competitor in the electronic vehicle space, but they really aren't unless you incorporate the majority of the Chinese business, which, by the way, I mean, those cars aren't shipping to US, I'll tell you that much, you know what I'm saying? Given what's going on right now. So I really want to make this very clear, because that's why in some cases, people just get things completely out of context. Boyd is primarily also selling in China. So, I mean, and in the greater Chinese region, I'll give it to you, but really it's China, okay? So that's what the space looks like. So when we talk about what needs to happen, the trajectory, it's not any shade towards combustible engine that we're talking about. It really is this idea that there are certain countries that do not produce oil or not gas, and also have certain, let's call it problems right now with issues overseas, or issues with some of their neighbors, if you will. And that is a really big problem if you want to maintain sovereignty over your country. Okay, now I'm going to keep sharing, because then that was just the portion that I thought they blatantly got wrong. The other thing that they tried to suggest was the case that I thought was complete malarkey was that no roadmap was actually laid out, or not adequate detail was given on how this new manufacturing process was going to actually be executed and happen. The fact is, they're already executing huge swaths of it, number one. And number two, they were very clear that it was going to be implemented in the Mexican plant. So I have no idea what they're talking about. And also, by the way, the crazy thing is that as all of that was going on, one of the big presentations was how long it took to put China up, and how long it took to get China online. And it didn't take very long. So if you were really trying to figure out the timing of when this stuff was going to come to pass, you need to only look at what China was doing. So let's talk about really briefly what was. This was probably the nail in the coffin for most legacy automotive. Their most important point was the first point that came out. You have to go to 1 hour and 4 minutes, and it had to do with the fundamental shift and the way they're going to manufacture. Currently, this hasn't changed since Henry Ford. Okay, so we're talking like turn of the century. Everybody's been building out the frame first and then sticking stuff in the middle. They're not going to do it that way going forward. They're going to do this, which is what they're calling the unbox process. And essentially what they're going to do is they're going to make the different pieces of the car first and then stick them together at the end, so that you're not constantly taking the car apart, putting it back together, taking it apart. So I encourage you, if I'm not explaining it well, to definitely look at that portion of the video. Additionally, I would also mention that implies, because they're doing it that way, significant space savings on the factory floor. And as you can see, a 50% reduction in cost just from that. So the thing that I was looking for, which is how are you going to save money so that we get economy of scale and operation expansion going forward, that was answered within the first hour. But then they kept going to answer this question. It also, by the way, this implies it's faster to put factories up. Then they talked about the fact that their semiconductors, because of the new design, are both cheaper, faster, use less silica, et cetera, et cetera, et cetera. Some media did actually report this correctly. Namely, for the first time, I actually have to give CNBC full kudos, because they were far more interested in seeing what was going on in semis as a function of this announcement. And that was the correct call. But you can even visually see the difference in the semi design. So that's I have no idea why anyone would report that they weren't clear on how precisely they're going to save money. Additionally, this was a ridiculously important announcement. Rare earth metals no longer needed in the construction of the batteries. And I'm going to tell you, part of the reason why this is so boss and important is because we don't have rare earth materials here in the US that we actually mine and then actually allow manufacturing to have. That is primarily coming from China. And, this world is headed in a very strange way. No hate towards anyone, but it's really, really smart to be able to get off of the rare earths issue. They had already reduced the number of rare earth materials that were needed, but going completely to zero is boss. I actually don't know another way to say it. It's a huge reduction. That portion is at 1 hour and 11 minutes on the YouTube video. I'll sync it in the show notes in case you guys want to just watch it and think about it for yourself, play it in the background or whatever it is. And then this improved battery life output, I watch Meantime. I'm just like, how are we watching the same thing? Because there was one media agency, I won't pick on them and call them out, but they were talking about how this was just not that big of a deal. It was really stupid. And I'm like, were you like reading this? I don't understand how they don't understand this is a big deal. This graph that they showed is a graph of how much electricity is required right now, and how much pull that's had on the battery as a function of it. And when they move to 48 volt, it drops significantly, but also as a function of that, the wiring weight drops significantly. All this other stuff drops. And so it massively reduces costs. Plus it also just means that the battery life can be better. Okay. It's like this crazy thing. And they're just like, I don't understand that, like how that's beneficial. It was the weirdest reporting that I saw. And I apologize that I'm going to probably skip over some of the engineering. So you guys, if your engineering whizzes, definitely post it in there. If I'm missing some finer points, I'll totally give it to you. Oh, sorry. I forgot that. WT Wisco, you're right. Past performance, not indicative of future returns. I am definitely long Tesla. And I've currently got a whole bunch of different positions on it, including I do have some strangles because I just don't trust this darn marketplace to do what it does right now. I think it's insane. But any options that I have that are long are probably farther back because I just think that right now the market's insane. That's my positioning. Thank you for prompting me because you're right, JT Wisco. I probably should mention that in full disclosure. Okay. Speed of factory improvement. This was something that came out of the point when they were discussing the upgrades to the Chinese factory, where even that factory was built in 2019, and there were a number of manual processes where they just literally ripped the head count out and were able to automate it, reducing it. It used to be like 1,000 people that were doing this one process, and now it's like 10. Okay. And they consistently and continuously do that. So there's a whole section that they talk about on the speed of the improvements made even in existing factories. This one's a little bit hard to tell out of context, so I apologize. I'll just skip to the next one. Here is the next one. Every 45 seconds, a new Tesla rolls off the assembly line. That's the actual stat that they gave in the call. And here they show how Shanghai opening up in 2019, but then 2021 during COVID, this little downsized blip is just what happened during the COVID lockdown specific to China, very different than what happened in other countries. But you can see a huge reduction in headcount, huge increase in output as the factory ramps up. But even their legacy factory in Fremont, it's a much older factory, but they're still just taking the learning output from one factory, applying it to others, and getting this beautiful increase in production with a decrease in headcount. One other thing I just wanted to show you, sorry, I just realized I skipped over this. This was what they were showing, and I'm actually going to increase the size of this best I can, as relates to simplified wiring, okay? That was another big thing that they were talking about. This battery allows them to simplify the wiring. And they tried to go it this way through these diagrams, these wiring diagrams. This was the 2012 Model S, which had a lot of wiring. The new Cybertruck, you can kind of visually see, or you can go into the video and see it more clearly for yourself. The amount of wiring is significantly lower. So it's software benefits, weight benefits, battery life benefits. There's a bunch of safety improvements as a function of that. And then obviously, if you've got less wiring and you've got it all streamlined, it's faster to produce these cars. So I have no idea what people were talking about when they were talking about they didn't really demonstrate how they were going to do the things that they were going to do. Okay. Again, for those that pretended like these things were not told you it wasn't clear what was going to happen. They told you it was going to go in the Mexican factory. It took 9.5 months to build the Shanghai factory. So let's just even give it a little bit of buffer, because maybe something happens. Maybe there's an earthquake or something in Mexico, because, all that stuff. You're still going to build it in about 10 months to a year tops. And these factories apparently, over time, I don't know why I put 10x, but they are significantly faster build. All of the construction is huge components of the construction of the factories are in-house. There's other things also that are in-house that are very unique. But I mean, this is crazy. And also they have to get to the 20 million. They're not thinking just the factories that currently are working are going to be how they get there. They are building a ton more factories. In a lot of ways, if you think about it from a construction standpoint, if all this stuff is in-house, they're building essentially the same box, and they're just building it location to location to location. So you do get economies of scales. You do get improved manufacturing thought processes as you go. So this is crazy, because they're really describing how it is that they're going to increase output dramatically. And those arguments that they will never overtake a GM or Ford, I think I'm not sure how people are making that argument. I really am not at this point, because this investor day was actually that boss. Okay, other things, cost reduction. This is what they've already reduced from 2018 to 2022. They've already reduced the production by 30%, and they are targeting to reduce cost by 50% over the next by the next gen vehicle once it's fully ramped. Okay. Now, do we know exactly the date of the next gen? No, because it's probably going to be dependent on some of the other things as relates to factories, finishing, and et cetera, et cetera. Okay. So yeah, exactly. Thank you, Hadouken. Greater cost reduction means this car is cheaper. And that either means that it comes more to us, the investor, or, and just as interesting, the car costs less, so they sell more volume through, and the average person can actually buy it. And they do have this whole section where they talk about the fact that they intend to be priced at just slightly higher than the Toyota Corolla, which apparently is the highest selling vehicle given its price point, et cetera. So that's where they're headed. It's crazy. Okay. Opex, operating expenses. I love that they told us that the biggest component of that has and always will be R&D. But they clarify that even further, because unlike other tech companies that are trying to make their numbers by reducing OPEX, okay, fair enough, Salesforce had a decent quarter, but they did actually do some of it via OPEX, okay, or through R&D. However, here you see a massive decrease as a percentage of operating. Basically, you're seeing margin expansion is what's happening here, but you're not seeing it happen at the expense of R&D. That's the point of this particular whole section that the CFO was talking on. And a huge component of why they haven't had to do that is because SG&A has reduced dramatically. And we all know that Elon is his own advertising machine. I mean, what these guys spend versus what others spend on marketing is far lower. We've also talked about in past calls, they don't have the dealership network that is so expensive. And because they do most of that manufacturing of parts in-house, yes, they have different outsourced components. Yes, they have a supplier line, but so much of it is in-house. They pass that straight through to the consumer. So they make the seats in-house. They do a number of things in-house. That goes to the consumer. That's how they're actually getting the SG&A savings. It's not some fancy made up thing that is just magically happening. Okay, so that is close to the end. Okay, these were some other things that were important, but I wouldn't say they were as big a deal, because all that other stuff kind of makes me feel like the only thing that's going to happen, because well, I'll say final words at the end. But one of the things was this charging. They're just going to charge a flat rate of $30 a month and they're going to start it in certain areas for how much it would cost you monthly to charge your Tesla. I kind of like that, because if you live in a state where energy prices fluctuate dramatically, then you can think of it as your gas bill is just $30 a month, and it's just a flat rate and you're not going to have any problems with that. That's kind of cool, but it's kind of new. Unlimited home charging. That's exactly right, Hadouken. Thank you for putting it that way. There's some improvements in the batteries and self-driving. that they talked about. I don't think it was as big. I think that is fair and square more future updates than it is really important to the here and now. The heat pump business was just an update of the technology plus the potentiality that it might also become like some sort of product for home, but they were very clear that that wasn't what this call was about. Lithium, they are doing a bunch of stuff to try to speed the bottlenecks that exist. And they actually are like, look, it actually messes with the whole industry, but us personally, we need it sorted. That's why we're doing what's going on in Corpus Christi. And they do have a patent associated with it, so that'll probably be nice little licensing revenue that goes forward. But they plan on sharing their findings with the other lithium manufacturers just so they can get more lithium to happen. Okay, other stuff, valuation. Just want to go through this. Sometimes I forget to do a slide on valuation, and Dave inevitably asks me this, which is so the right question. Tesla with a $650 billion market cap. These are trailing numbers, and I'm giving trailing numbers because I think that the analysts can come out any number of ways, and then you can just do the math yourself to figure it out. But even on a trailing basis, it's trading with 19 billion in adjusted EBITDA, which it just reported, like it reported the December quarter last month. So that's 34 times, but it grew EBITDA 32%. As far as earnings go, 12.5 billion on that math is 52 times net income trailing, so backwards looking, but they grew 57% last year. And then operating gross margins are 23%. Sorry, I don't know why I said it that way. Gross margins are 23%, operating margins are 16%. For reference, y'all can look up Ford and GM. We're lucky if we get single digit on gross margin. And then, Ford took a big L this last quarter on operating margins. So this is what the numbers look like. And again, up until Ford took that gigantic L on this last quarter, Tesla with its 1.3 million cars made the same EBITDA as Ford when the market was going like this, and then they continue to make it. You know what I mean? Which is not the case for Ford. So you don't have as much fluctuation in that earnings that comes down to the investor. Okay. Auto revenue was just for other stuff that was from the last quarter's reporting. Revenue was up 35%, and then total revenue was up 37% in the last quarter, year over year. And I really highlight this because although all they really spoke about and focused, well, it's not true. Most of what they talked about and focused about on this investor day was the autos business, huge but, they talked about the battery business, they talked about these other things, but realized those businesses are ramping up. That's why you end up with total revenue at 37% and auto revenue up 35%. It's because these other technologies, others embedded businesses are a big deal. Okay. Last thing is, just so you know, they are anticipating making about 1.8 million cars. That was supposed to be conservative. That's 38% more cars in volume. And the reason I'm not giving any other like forward projections is the modeling is up to you guys at this point so early in the year. Realizing that they did lower prices on some of the cars, but given what we heard at Investor Day, their costs are going down too. So there's some of that. Thank you, Hadouken, for posting that. Gross margins are in the teens at best, but then when you get to Opex, operating margins, they can take an L at any given time. It's a little bit crazy. So thank you for posting that. Okay, cool. Other stuff that we've got. Okay, I'm going to open up the comments. Oh, I forgot to mention, but hopefully you guys saw it. I've got my two favorite trading chartists on here with me, and they're going to come on just after this slide. So I'm super excited. Yeah. Oh, the insurance business, they didn't talk to very much, but it is a big deal. Oh yeah. Sorry. I was going to actually take this guy's pictures off, but they mostly focused on like too long and wordy for the average investor. Here, I'm going to take it off because I don't want to shame these guys. So one of the things they mentioned that they were shorting it was they felt like the investor day was too long and wordy. Okay, investor days are typically, the second word in that is really important. It's usually a full day. So this was 3 hours, and most investor days are about that long. That's the full year number, Hadouken, that Hadouken is posting on up here. They actually, in this last quarter, had a little bit of a harder time. But the full year number, you're right, is 8% for Ford and 6.5% for GM. But It's an annual number, and it may be a little deceiving given what happened this last quarter. Okay, so and then the other person that spoke negatively about Tesla was this vibe concept. But the person and the people that they were interviewing, none of them were actually physically there. And I'm just like, you realize like everybody goes through this massive factory tour first, and then they wait for the major investors to actually get done with the factory tour to come into the auditorium to have investor day. So I thought a lot of the criticisms for how Tesla ran its investor day were kind of, I don't know a nicer way to say this, so I'm just going to say it. They were kind of amateur. Like they showed no understanding of what an investor day actually is. And with that, I'm going to share it with my favorite peeps because these guys kept me out of trouble because they had me a little hedged going in to investor day, which I appreciate. How's it going? Richard and David, you guys know, but Richard, I would love to have him introduce a little bit about what he does at Gurula because I think he's amazing. Can I put you on the spot for a second, Richard, and have you talk about yourself?
Sure, sure. So my name is Richard Gordon, and thanks, May, for having me. So we have a group that trades daily, live in the markets. And of course, all of the things I talk about and share, it's not financial advice. Past performance is no guarantee of future results. But we do a lot of charting. I do want to share my screen. Can I do that?
Yeah, absolutely. Go for it.
Okay, so I'm not sure. It's telling me to select a. Here we go. Well, I'm going to select this one. And hopefully when I open up my Thinkorswim, you'll be able to see it. Can you see my Thinkorswim screen?
Okay. Yes, there it
Yes.
goes. Wonderful.
Oh, all right. Perfect. Perfect. Um, so what we do is we basically do our due diligence over the weekend and then come into the market at 9 o'clock at least and sort of get an idea about what's going to be happening. And Tesla's one of my favorites. And I was surprised at the amount of the decline this morning. I fully expected Tesla to decline, and my target for the decline was this 20-day exponential moving average here, which I've been looking for Tesla to test all week. And it almost got there a few days ago, and then today it fell below. So when it fell so much, I did not think it was going to continue. I'm going to show you a different screen. So this morning, I bought Tesla calls right around here, and I'll just sort of circle it on my chart. I bought Tesla calls here, and as long as Tesla stayed above this red dotted line, so this red dotted line and this green dotted line is what I use for the opening range, and it's the high and low of the stock during the first 15 minutes of trading. So the green line is the opening high within the first 15 minutes, and the red is the low for the first 15 minutes. So as long as Tesla stayed above this red line, I was going to stay in my calls. If it, for some reason, fell below this red line, I was then going to buy puts. Because if you notice on the daily chart, Tesla's sort of levitating here between the 20-day EMA and the 50-day EMA, and it could have gone either way. So I was really, really cautiously optimistic, but I wanted to be in calls because I thought that that drop was just a bit too much. And what happened with Tesla is it did make an initial climb, and then it just consolidated for the remainder of the day. So if you look at it on a different time frame, the 5-day EMA, I'm sorry, 5-day, 5-minute chart, and then of course the 30-minute chart, you see this consolidation. And the one thing I was looking for on the 30-minute chart, because I had trouble with this all day, was to break above this 20-day EMA on the 30-minute chart. So it didn't happen most of the day. However, I did not get a sell signal. And then at the last half hour, Tesla actually was successful at breaking above this resistance. So then I added to my calls. So I think that tomorrow, Tesla will rise. The question will be, how will it handle this resistance at 194.76 or say 195? And then again at 196 and then at 199. I'm expecting by the end of the day for Tesla to be above 199.70, so back close to 200. But I don't think that it's going to continue moving to the upside. I think it's going to actually decline and come back and take a bit of a break and find a base and then start to move up. If I zoom out on my chart, let me make this larger. If I zoom out on my chart, if I go and look at the 1 year, this is the 1 year. So if I just zoom out here, uh, you'll see there's this consolidation here, this congestion. We're almost at the same place. So this was kind of expected that Tesla would have a problem above this level. There are a bunch of sellers here. They will eventually become buyers. And if we're able to get above this level, then you're going to have the same thing here. But you've got a gap at 62.47, and then a gap at 146.41. I do not believe Tesla will test its lows uh, anymore. This low of 101.81, this was a 2.5 year low. And if I take this out for and I need to use a weekly chart, I want to show you what I saw here because I think it's really important. So this is a consolidation. This is back in, looks like July 2020. When Tesla started its decline. And what I saw, if you understand candlestick patterns, is something that looked almost like at the bottom of this move, and it bounced perfectly off of this low. I mean, it was almost predictable, to be quite honest. And this was a 2.5 year low, and then it started to climb. Well, now you see it's running out of gas, and we've got a flag happening here. So I'm just going to draw this from here. This is a bull flag, so I do expect at some point Tesla's going to find support. It could very well be around what is that, 170 on the decline, and then it's going to probably make its move back to the upside, a fairly strong move. And it's also forming a cup. So you can get a cup and handle pattern on the weekly, a flagging pattern on the weekly, and at that point, Tesla's going to close the gap at 262.47. That's my theory. On average, Tesla moves about $25 a week, and each month, and I'm looking at the ATR on my chart, so up in the upper left-hand corner, each month it moves about $73.74. So once Tesla reaches this ATR trailing stop on the daily chart, I can calculate how long it's going to take for it to close this gap. So from 169 or 170 to 262, we're probably talking a little about over a month, maybe 5 to 6 weeks to close this gap. So at that point, I would then go long on Tesla and probably buy options 60 days out. And those would be naked options. I don't typically trade spreads. I know a lot of people do because it's a safer position, but I take my trades seriously and I tend to take the riskier trades. So I trade naked options, and I am currently in Tesla call options expiring tomorrow. So hopefully that's helpful. And if there are any questions about the style that we use or I use, I'll be more than happy to answer them.
So you've got calls on then for tomorrow morning.
I do. Yes. I was in calls from this morning. I bought some this morning, just about 9:40. And then, of course, I bought more around 3:45 this afternoon based on the fact that Tesla broke a key area of resistance. So I do expect it to gap open to the upside tomorrow. I'm not sure if it will continue, but I expect to profit off of the overnight move.
Okay. We've got a couple of questions. What indicator do you use, Israel?
All right, so let me share my screen again and show those because I think that's
Okay.
really important. And I'm going to share my entire screen here. And I'll just go through them. So I use the 5-day exponential moving average, the 20 and the 50 and the 200 on my daily charts, on my 4-hour, on my 1-hour, on my 30-minute. And when I'm intraday trader, so I don't typically swing. I took a little bit of a risk today. On my 5-minute and 2-minute charts, which I actually use trading. I have the 5, the 20, and the 50. I use the VWAP. And you'll see here, this is the opening range. The opening range, this automatically gets placed on my chart at 9:45. So the first 15 minutes of trading, whatever the high is or the low is for the stock, that gets marked on my screen. And you'll see the Fibonacci levels above, in the middle, and below as well, which help to serve as support and resistance. And I also use the ATR, what's called the ATR trailing stops. This is based on the time frame. So if I go to a daily chart, for example, you see the purple dots above. This is resistance. This is based on Tesla's price action over a 13-day period. So it will measure and then place this resistance on the chart past 13 days, and it will move with the stock price. And once it breaks through that resistance, then that ends up becoming support. See, these purple dots now turn blue, and they move down to the bottom. And of course, it's measuring again the past 13 days, the range that Tesla has moved over the past 13 days to establish that support and that resistance. This is really strong support and resistance. So whenever it breaks, it's significant, depending on the direction. So here you see Tesla broke on, I guess it was 125. And at that point, that would signal to me to enter a trade to the upside. If I'm in a trade to the upside, for example, if I got in here at this bottom, once I see the candles start to sort of move sideways and I'm looking at this resistance, I would exit without about it. I wouldn't wait for a reversal. I would simply understand that this is resistance. It's really strong resistance. I have a spinning top candle, which signals indecision. So I would exit and I would either for it to break or wait for it to decline and then make a decision after that. That's basically it. These are all placed on my chart automatically by the application. I do draw some trend lines, and of course, I'll indicate where there are gaps. These price levels here, this is my favorite, and I make these up myself. So this, for example, is a monthly chart on Tesla. And I like to claim these are institutional support and resistance identifiers. And what I do, I correlate the wicks or the highs and lows of at least 2 monthly candles to identify critical resistance or support. You'll see here, here's the high going back to October, correlated with the high on this candle in March. Here you have a high in May, correlated with this candle in July, and also this one in February, and this one in November. So to be very strong, and this is again where I believe algorithms are going to be buying or selling Tesla, depending upon what's happening with the candles individually. And I use this to help make decisions when I don't have any other support and resistance on my chart. Going to a daily chart, for example, you'll see this is where I would look to either enter a trade to the upside if we get a bounce off of this support, or enter a trade to the downside if we break this support level like it did here. But so I've got this, which is the institutional algorithmic support and resistance that I create or I draw with my eyes. My moving averages, I use the exponential, not the simple, and I have the ATR trailing stops. And this is all support and resistance and used for decision making.
All right, really cool. David, did you have something you wanted to say? I'm sorry, I got. David, go ahead.
Oh yeah, if Richard is finished.
Yes.
Yeah, I
Thanks,
just want
Lane.
to say,
Thanks, David.
yeah, hi Richard. He has a the program that he runs starts with $500. He tries to turn it into $100,000. So, and he's well on his way. It's pretty cool. We have an algorithm. Mostly we use Fibonacci numbers. So, for example, Tesla had a high the other day of 211.20. Our Fibonacci number was 211 on the high side, and on the low side, it was 204. The low was 203.80. And I send those out, and you can see those on our website, Gurula.app, on a daily basis. Richard and I agree on a lot of things like gaps, like Tesla gap down today from 202. So that gap will be filled probably, next week. 202 is also another Fibonacci number. So that's the number I would be watching.
Yeah, David, on that,
Go ahead.
gaps, 80% of gaps get filled. So that's really important to note.
Yeah. And so we're looking at that gap at what, 257, I guess is the lower part of it. Another thing we look at is the seasonality of the stock market. Tesla is going to, trade in sentiment somewhat with the rest of the market. March to August is a very strong upward seasonal bias. So sometime in March, that's where you want to be in Tesla on the long side, from our point of view.
Okay, so we've got a couple questions on AMC. Would you feel comfortable, Richard, taking a quick look at AMC for some of the folks that have
Sure. Yeah, I traded it the other day, which is my first time. I did really well. I was really happy with it.
All right, I'll give you a second. You guys keep the questions coming. When I come in and out of that question box, it's a little bit hard sometimes. There's a number of great options classes out there. A couple shout outs. PV, thank you for that. I'll make the adjustment. And then, was today a fluke? It's always hard to say. Look, the market is always right above and beyond what any of us might want to feel like. I would say that, was there a reason for it to be down 6%? I didn't see a good one. I will say that. So, the market's really skittish in general. We've got CPI coming out tomorrow. So even though all of this is absolutely kind of how we are thinking about it and our disciplined ways of considering our investments, the fact is CPI is going to be a really big data point. It's crazy in a lot of ways because economic data points, sometimes people make a lot more of them than they should because, every month you've got another one. But because the PCE and CPI came in so strong off the January number, it's anyone's guess what will happen relative to the estimate that's been posted there. And I think there's going to be a lot of oddity in the number itself because the futures price versus the price the consumer experienced for the month of January kind of was very different. And that's why I think you got the weird upside that you got. But as we, so both food and energy. But as we enter February and March, this will either be the last month that it reads very strange and then we start to see a declining number, or it'll be in March. It's these two. And so that it's just a function of how do we then think about that. And that's just a function of, if you look at the futures market, it's just going to be that way. Richard, go ahead and share your screen because I have to open up the screen anyways. That's what I was waiting for. Restream.
Okay.
Yeah, so go ahead and share it and then I'll open it up. It looks like we've got AC ready.
Yeah, I think it's really interesting. And one thing I want to point out about the way I trade and the way our group trades. So again, this is the opening range high and opening range low. We don't really care which direction the stock takes. Oftentimes we'll use this as a signal, a buy signal, once it breaks below this low or to the upside, and many others, but we don't really care which direction. So looking at AMC, what I'm seeing here is stocks typically, when they do retrace, that the 20-day EMA is generally a very strong support level. And you see here this move up, and now you've got what would be a spinning top. It failed to hold on the 5-day EMA, this blue line. and a spinning top here. Both of those are indecision and indicate that a reversal is forthcoming. Don't really know when, but it's holding on the 20-day EMA, which looks like you could get a positive move back to the upside on AMC tomorrow. So you see the same thing here. It breaks through, spinning top, finds support on the 5, and it moves up. This time it fell through the 5, so next we would expect it to find support on the 20. If it, in some reason, falls through the 20-day EMA, then your next level of support, and I need to use the right tool for this, is going to be this ATR trailing stop. ATR stands for average true range. And just like I mentioned earlier, uh, this is based on a 13-day period. This is where AMC has been trading over the past 13 days. And if I back this out a little bit, you see here, it was here and then here. So it's really trading in this range over the past 13 days by, according to the price action, the average price action. So I would expect if it does fall through the 20-day EMA on the daily chart, that it will head here. And if we look at some earlier, some different time frame, 4 hours. So here you've got the 5-day EMA crossing the 50, which is a bearish signal. However, you do see the reversal candles. You've got spinning top, doji, and by tomorrow morning, you could have this reversal where you're back above the 5-day EMA on the 4-hour. And then, of course, in the pre-market, you'd be able to see that, and you would expect that it will move up rather than down. Just like, again, we've got a reversal here. This is a 1-hour chart. However, it failed trying to get over the 200-day EMA, which is this very thick line. And if we go back to a different time frame, so you see it starting to consolidate along this bottom and trying to find a base. And I believe that, again, tomorrow, what's going to happen is, given what happened with the market today, there are a lot of engulfing bullish candles. So the market wants to go higher. And typically what happens, not always, whatever the market does on Thursday, it does on Friday. So I would expect that we could get a move up overall in the market tomorrow. And if that's the case, then I would also expect AMC to bounce off this 20-day exponential moving average, which is currently at, looks like $6.
All right.
I'd be more than happy to answer anything about that, but that's my thought.
Well, there's a lot of people who are going to be excited about your thought as far as it goes, because we got a lot of AMC fans for sure on here. I'm trying to go through. Let's see. I think we got most
Hey,
of it.
May, can I throw something
Sure,
fundamentally?
absolutely.
I think 20 million is lowballing. I mean, GM has 61 million cars on the road today. So, and they weren't the number one as far as internal combustion engine. So, I mean, I don't know. He's, like GM has Chevrolet, Cadillac, they had Pontiac, they had Buick, blah, blah, blah. I think there'll be eventually several different levels of Tesla.
Kim, we went through some of it, and I got to tell you, with CPI tomorrow, that would be the one thing that I feel like Richard, David, and I agree. CPI can always be a weird thing that just crushes the markets, but the technicals do look like they should be biased up. That's kind of the bet we're taking. We'll see, knock on wood. We don't want to get too cocky one way or the other. But as far as the fundamentals go, there was nothing negative in this investor day. And Dave, I totally agree with you as relates to the only thing really constraining them right now, I would say that even though they talk about a couple of areas of bottlenecks, it's really lithium. Okay. And then the cathode ray but it's really lithium, because the other stuff
they have a lithium refinery in Corpus Christi. They're going to show everybody how to refine lithium.
That's exactly right. So they will get over.
Can I make a comment about Tesla?
Yeah.
So the one thing I've noticed about Tesla is Tesla basically outperforms the SPY typically. So even when the SPY is declining and the overall market is declining, Tesla still can move to the upside.
It's weird.
It's just it's it's a stock all into itself. What was really interesting today is I think it was Bostic, one of the Fed speakers,
Yes, Atlanta.
essentially said, yeah, so he was saying today that they're very interested to see how the work they've already done is going to impact the economy. And he sort of inferred that they might consider a pause.
They so
And
need to do that.
I think that was what juiced the markets today. So no matter what the CPI is tomorrow, those comments coming before the CPI, that they need to kind of wait and see what the market or what the economy is going to look like based on the actions they've already taken, was pretty significant. So I would suspect again that Tesla will probably run tomorrow because it's down so much today, and it should bounce. It should have bounced today. I'm surprised that it didn't go up today. I don't know if Elon was selling today because he
Well,
thought that'd be a good time to
people
sell.
have told me that there is a pattern where on Investor Day, people tend to sell it on Investor Day, and that's just traditionally, for whatever reason, it's always bad
Yeah,
juju.
sell the news, right?
Yeah, but it kind of,
No, it's gone down on all previous investor days
yeah.
afterwards, the day after.
That said, some people also told me that if they did like some work on the average, that it goes down on Investor Day, and this was a little bit aggressive, for lack of a better way to say it. But truly, there was nothing on this Investor Day other than he didn't show the actual vehicle, which I mean, like if they got a release fair and square, they got a release, but it wasn't clear to me that they were going to show the actual vehicle itself. They did show two different colored vehicles, new colors that they were doing, and they showed the Cybertruck. And, they demonstrated clearly that they were making a lot of progress on the new factory in Mexico, which was the big announcement. But I don't know. I don't know why. The one thing that was so interesting to me when I was talking to my friend group about how they were hearing it, which was so different from what I then read in the press first thing this morning, was that we actually have no idea, especially with the new factory approach that they're taking when they're splitting it up and then putting it back together. It's more efficient, and also from the perspective of accidents, things like that, it's actually faster for them to fix the car as well. But we have no idea how GM and Ford or any of the legacies competes with that, because they would literally have to undo their existing factories and in order to compete, or build completely new existing factories. We're like, the only thing that probably would be the smart thing for someone like Ford and GM to do at this point is, instead of continuing to plow through this, just outsource the manufacturing and private label to Tesla, which I wouldn't be surprised if that
Well,
happens, because if you just
Right.
can't make it, you just can't make it. I don't know another
the thing that really gets me, and I listened to the comments about the lack of detail, and I think that's lunacy.
lunacy.
The reason for it is, first of all, no one in a public meeting is going to talk about their IP. Why would you show a car that's going to take some time to build so that your competitors can copy the
Right,
design just
exactly.
by looking at it? I mean, it's really stupid. So, yeah, I just missed that. I mean, it's a high-level briefing. It's not intended to be detailed unless you're in the operational environment in the boardroom and you're talking to your board members, and you wouldn't talk about the
Yeah,
details
and
of
I was,
the operation like
even
that.
what they did announce, I was already thinking that was a lot more detail than I was expecting. And also, I feel like the fact that they felt very comfortable telling the world what their new manufacturing process was going to be is a way of saying, you have no shot, right? Like, as a legacy manufacturer,
Right.
and they know it, we all know it, but nonetheless, the market does what it does, and it ticks me off sometimes, but I still have to accept it, like everybody else that plays this world of markets. So,
Yeah, man,
uh,
Can I make an AMC
a
comment real quick
corporation
here?
is going to mimic its CEO, and he's an engineer. So, I mean, he doesn't like sales. He doesn't like advertising. He, he doesn't need it. So those guys are all engineers. They're not used car salesmen.
yeah, it's true.
Can I make a quick comment
Yeah,
about
absolutely.
AMC?
What you got, Richard?
Yeah, one thing to note is that the volume was significantly low today. So even on that decline, the average volume over the past 50 days, according to what I'm looking at, is about 59 million. The volume today was 28 million shares. So the volume was significantly low. So that tells me that it's likely finding a base for a move to the upside.
Well, you got a lot of fans here, I'll tell you, as we like say, I'm seeing self included. I have the APE shares, which I know are not as much fun as the AMC shares, and we'll see how all that plays out.
If the deal falls apart, does APE go to zero?
I don't think you can allow that to happen because you then have
Okay.
shareholder suits on the other side of that. Do you know what I mean?
Okay.
Like any way you slice it, it's just such an
Yeah, I don't see how
awkward.
the arbitrage does not work.
Yeah, that arbitrage situation, I mean, like, look, there's no such thing as an unsafe or riskless arbitrage anymore. There used to be lots of riskless arbitrages out there, but this one is, I think the only thing that you have to be careful with on the arbitrage between APE and AMC, if that's what you're doing versus just going long APE or long AMC, the only little nuance that you got to be careful on there is the timing, because like, for example, I think Activision is a really good one as that's very recent. The timing's been all over the place with that deal. It now looks like with Activision that it's looking like the UK will let it go. And I kind of think that that's probably some cash money that's helping that to happen. But like, if that, but if you look at where that's traded all around, it's not the most straightforward. So, but that's always the case with any share class difference, with any convergence, with any corporate action oriented situation. Timing is a tough part. And so you got to be really careful how you place the trade. Farther back is better, or just buy the stock, buy the shares. In this case, because APE is literally $2 and change, it's
No, it's $1.66.
no, it didn't trade up at the end of the day. I thought it traded up. Okay, so it's $1.66. Sorry.
I mean, it's a better deal. That's really
Yeah,
cheap.
yeah.
Okay.
I mean,
Sorry.
they're both good in their own way. I won't like say anything more than the other. They're both good in their own way. Let me say it that way. Israel, yeah, I know I owe you a message. That is so awesome. I think you should. This is a good question for the AMC folks. I'm asking him if he could buy either. I love that. That's a great question. I thought about some good questions for you, so I will ping you on the back channel, and you should tell him if you're willing to, because I know you probably have your own series of things. You should tell him that we love him at Markets at May, as far as it goes, for sure. Yeah. Silvergate Capital. I don't have too much on there. You know what? I got to do more work on Silver.
Oh wow,
You have some thoughts, Richard?
that was really bad. Well, I mean, it's. I wish I bought puts. I mean, the fact that they missed their filing with SEC was huge, and I don't know what that's going to mean going forward. But I mean, I think Silvergate's probably a good buy at this point. So I would be actually buying versus selling. But missing that filing deadline was harmful.
Yeah. I got to take a look. I don't know enough about it. Sorry, guys. All right. Oh, are they really? Okay, then I definitely have to take a look. I mean, I'll tell you, the FTX stuff, I don't know how anyone, like, I mean, I have a few videos out on that as well. Like, that interview that he did with the New York Times was just the worst. It was the worst. I've never heard of such ridiculousness as relates to any thought process surrounding risk management, let alone do anything. I have no idea how private equity wasn't doing better due diligence. But then a lot of private equity has come out, different private equity firms have come out and been like, listen, when he came into our office, let me tell you what happened. So, and they had the same reaction I did. So, it's kind of a little bit crazy out there. All right, let's see if we've got any others. Yeah, this isn't a good sign. I mean, I'll take a closer look and do something kind of more thoughtful on it, because I want to see what else they have beside, if it's all, is it all, I don't know if it's all crypto. I really haven't done any work on this company, but if they did the same due diligence that they did at FTX, then they really didn't know what they were investing in. And in fairness, the way that some of the regulation has been written, and the way that folks have then structured their companies, I got issues with more than one company within crypto, and it's in my to-do list to do more work. Coinbase, I definitely owe everybody a follow-up video. And as much as okay, I think that I always hate in some ways to bet against. I mean, as much as people have made money betting against Cathie Wood, and I kind of admire that she wants to be very pro Coinbase, but that was a terrible quarter. Like, I really don't know another way to say it. That was a terrible quarter. The fact that it traded up on the quarter, I just kind of was like, in the way it was trading the entire time, and I was looking at it, I was like, ooh, this is not trading based on anything remotely fundamental. I mean, like what they did, quote unquote, better than expected, but if you really look at it, all they're a broker dealer that literally, if there was one little puff, that thing could collapse given how they're structured. But I will do a full video on it at some point so you guys could see it. Yeah, just be careful. If I mean, there are certain names that the day traders, I would never take away their joy. Do you know what I mean? So enjoy it, trade it up and down, but like just be careful with it is all I have to say. Do you know what I mean? Just be careful with it.
It looks bullish on the chart, by
It
the way.
That's
does.
in
I
a
know.
wedge.
That's why
It's
I'm
in a
like so
wedge.
scared to touch it too much. I mean, I think it's a little bit range bound here, but like,
It was. I don't think it is
oh,
any
you think
longer. I think
it'll
after
okay, so that's
today,
good to know. That's good to know. Like
yeah.
I have to do something proper on it though, for sure, because it does have its fair share of folks that really like it. But that was, I mean, everybody's so excited that they improved EBITDA, but it was still, I mean, it's still negative, and they're doing massive cash burns, and almost all their cash is going to either pay people or, okay, here's the thing. Almost all the R&D on Coinbase is to shore up security so that people can't try to ping the company to like steal from it, essentially. Right? So like whenever they reduce R&D, it scares the bejesus out of me, because it's not like hackers have reduced R&D. Do you know what I mean? So I get really concerned, and so as a result, the thing that they are doing is they're just trading less stuff on their exchange so that they can protect the parts of it that they, you know. So it's, yeah, coin, exactly, that's what we're talking about, JT. So it's the whole call kind of scared me. The whole call freaked me out.
So hey, so one thing to note about Coinbase, it is an inside weekly candle, and it looks like it may actually form another one
So
this
it may
week.
trade
But
upside
uh,
everything. It's true.
yeah, I
But
mean,
it's not,
it's if it breaks some key resistance tomorrow, then I'm going to go long on coin.
yeah.
It's going
No,
to go back and test that previous high.
I think that this thing will trade, because it kind of will be the last broker standing. There were a lot of like conceptual misunderstandings that people had as related to within crypto in general, but especially within these businesses. At first, I thought it was me, but the more I read, because I had to do this one consulting project, the more I read, the more I was like, this is not me. This is actually a conceptual misunderstanding of overnight rules in FX. In other words, and it's really interesting because actually I think the only exchange that may actually have enough capital to manage this overnight rule is Binance, because it's kind of been proving. What I'm talking about is this, well, there's a couple things, and this is not necessarily true of Coin, but this is true of most of the other brokerages, not the least of which was FTX. But like, so in December, you guys will recall that there was this situation where people couldn't get they couldn't get their whatever it was they had translated into one of the stable coins, because, and the excuse that Binance gave was because even though they had the capital and they had all those things to actually do the final piece of the translation, there's a bank that's based in New York that was just closed for the weekend, and so they didn't have enough just cash money on hand to be able to enact the transaction. And that is an actual real thing that is true. But remember that if you've got FX currency translation, it wouldn't take much for me to just collapse you if that was what I was trying to do. Yeah. So it's not, and also for a stable coin, it's not great because it also has certain implications for how you would need to reserve, which is not, by the way most of them are reserving. But that deserves very much so its own video. And coin by coin, I'd have to go through literally and watch each one of them. There's some other things too, because some of them were also doing this thing called they were doing this thing, and I have a video on this particular one. They were doing this bonding curve, and the way the bonding curve worked was exactly what it would make it ideal for someone to basically short sell the living daylights out of their coin once it got to a certain place. Like, it was literally not only making it ideal because it was increasing the volume in a particular way as it increased in price, but it was also giving you the exact math on which it was doing it. So I was like, this is clearly a problem. Like, so I kind of, and each coin is different and each setup is different. So I kind of understand, while I kind of think you should deserve to be able to get an interest rate on any staking that you do, like bank by bank, broker by broker, you kind of have to double check how the staking is being done, because some of it is being done in a way where clearly you wouldn't be, there's a time delay that's just enough where you would end up running a negative number as you were staking, such that you owed more than you actually were taking in. So there's anyways, this is, I'm turning this end part into something that I wasn't intending, but like
Hey,
I don't think the powers that be are wrong for potentially questioning whether staking is okay for the US market. You know, do what you want overseas, we don't have any say over that. But
okay, if you stake a coin and I'm the one that buys that coin, do I get the appreciation from the day I buy it till the day I sell it? Is that why they stake it?
so the staking was there's a couple different things that were being done there with staking. It really was the bank, the crypto bank. You were lending it to the crypto bank, and the crypto bank was doing a lot of different things with it. Number one, they were in some cases able to use it to get certain types of protocol benefits, because this is like a much longer story. So
Okay.
it's not similar to what we think of as interest rates if you're going to a bank, but they present it like it's interest rates, and it's not. There's
So
that's
it's to
like,
the
I don't know
banks.
how to say it. It's not. There's a couple
It's
of
not for
different
the short term.
there's a couple of different steps in there that are being missed, and then the timing difference between those steps actually creates, let's call it leakage, for better or for worse, and that's where it gets a little dicey. But I mean, to explain it clearly, I definitely need to have some diagrams and like really show it to you and then walk it through a very specific thing. It's not actually that straightforward. If it went sideways, it would create.
I'd like to
Okay,
see your
yeah,
AMC. I would like to see your apes get into Tesla. I mean, it's legitimate. You know, they don't need all this. They don't need the preferred. I mean, the guys, yeah, he did a great thing, but Elon Musk, it's exciting to see what's going on there.
I think they're two very fun stocks to be a
Right.
part of. I wouldn't one over the other. Hadouken, you're totally right. There's so much. I have a whole series on FTX and how ridiculous that was, and I think it's a very sad story, and it's even sadder that his parents are still claiming that their child is innocent when it's very clear their child was not innocent. But I get it, and I think it's really sad that he's actually destroyed their careers as well in the mix of it. But okay, we should find a stopping place. It seems like you guys loved and enjoyed David and Richard. You always enjoy David, I know that, but Richard, it's his first time on the show, so please
Thank you.
put it in the comments because I'd love to see it. I'm seeing it like crazy in the chat, so I appreciate you guys. Until next time, bye guys. Good luck on Friday.